Hello property entrepreneurs. If you're serious about investing in HMOs, then I'm going to share with you 5 pitfalls that you need to know about, because they're traps that will ensnare the unwary into HMO poverty, shall we say. HMOs are houses in multiple occupation. It's basically when you split up a house into separate rooms and rent those rooms out individually. There are many videos online where the whole strategy is talked about as being almost like a unicorn strategy to passive income, high cash flow and easy money. But there's plenty there to trap you, and in this video I'm going to show you with you 5 of those pitfall traps that you won't hear talked about on the other videos, and you need to know about before you even think about getting started in HMO investing. My name is Ranjan Bhattacharya. I've been investing in property for 30 years. We are heavily into HMOs. We run more than 200 rooms across North London. It's an area of property I know quite a bit about, and plenty of new investors that I come across simply don't know these 5 points that I'm going to share with you. If you're new to this channel, make sure you subscribe and hit the bell icon and like the video. It helps us out on YouTube. We publish new content each and every week, and it's all dedicated to helping you become more successful in property. Pitfall number 1. You need to fully understand occupier demand. Now, what do I mean by that? Well, there are plenty of videos out there talking about HMO investing, and they talk about going to some northern town where properties are cheap, you buy a 3-bedroom house and you carve it up into separate rooms and rent those rooms out individually. Everything is predicated on being able to rent out every single room, because there is occupier demand for every single room. You've got to fully test that yourself and not take anyone's word for it. How do you actually test for occupier demand? Well, if you're picking a town to invest in for HMOs, then actually go there and try to rent a room in that town yourself. Go on websites like Spare Room. Look for a room which you are looking to sort of develop, if you like, and then try to rent it. What you're looking for is how long are those rooms on the market. If you see a room advertised this week, go back and have a look in 2 weeks' time. Is it still on Spare Room as being unlet? That will give you a pretty strong indicator of occupier demand for these rooms. The problem we're seeing now is that, particularly in cheaper areas, investors are running to those areas thinking, hey, I can buy a property for £80,000. I can do it up as 4 rooms. I can rent them out. But quite frankly, the tenants aren't there. Those areas are low value areas for a reason. It's usually to do with employment prospects in the area, and we've got Brexit and all of that, and a lot of workers have gone back to the EU. And you tend to find in a lot of these towns, there simply isn't the occupier demand to sustain all these people going and making rooms to let. So, before splitting up a property into rooms in a particular town, do a full and thorough amount of research into whether those rooms are actually lettable or not, whether there's actually occupier demand. In many towns, there simply isn't. Now, here's my rule of thumb on what makes an area investable as an HMO in terms of finding good occupier demand. The national house price in the UK is roughly about £220,000. Now, when you pick an area, the more the house price is less than the national average, what that means is the barriers for people to enter the HMO market are far less. If the national house price is £250,000 or £220,000, and you're looking at a northern town where the house price is, you can buy a house for £50,000, that means every man and their dog will be up there trying to buy a house and convert it into an HMO. And you tend to find that those areas have a glut of supply. Interestingly enough, the areas where average house prices are above the national average, the less people have the means to get into the market in those areas, and therefore those areas tend to have a lack of supply. So that's a useful thing to bear in mind when you are researching your areas. Pitfall number 2 is about licensing. Now, a new rule came in last year, basically changing the game, if you like, for a lot of HMO landlords. You need a license from the local authority to operate an HMO which has more than 5 people in it. Some areas, of course, have chosen to have mandatory licensing. It doesn't matter what the property is or how few people are sharing the property, you still need a license. What licensing has done on a national scale has changed and affected a little bit of the profitability of HMOs. It used to be that you could have up to 6 people in a property and not require an HMO license. An HMO license costs around about £800, and that lasts for a 5-year period, and that's just the fee that you pay to the local authority for the privilege of them giving you a license to run an HMO. That doesn't include the cost of contractor works that you'll need to get done to make sure you're compliant with the local authority standards, and also the cost of extra certificates you'll need to meet the licensing criteria. Now, this is a problem because for smaller HMOs, if you've just got 5 rooms, the cost of all this compliance is often just not worth it in lower value areas. Now, many people are advocating that you go around getting standard 3-bedroom houses with perhaps 2 reception rooms downstairs and make those into a 5-room HMO. What I'm saying is, when you work through the 5 pitfall steps in this video, you will find that in many low value areas it simply does not work out financially viable to get a license on an HMO which is just 5 rooms. The other thing HMO licensing has done is it's made a lot of people look for properties to convert into HMOs where they can stay under the radar, under the licensing regime. And that means letting the property out to no more than 4 people. So if you want to stay under the licensing regime, you need a property which is basically 4 rooms. And none of those rooms can be double rooms, in other words, for double occupancy, because then you'll go over the 4 people licensing sort of threshold, which will create you another problem. Generally speaking, a 5-bedroom HMO is not worth getting a license for, because I don't think you've got enough extra rooms in the property to make enough extra margin to make the cost of complying with the licensing regime worthwhile. So a lot of people don't tell you that. A lot of people don't tell you that to stay under the licensing regime, it's 4 or less rooms. Those rooms have to be occupied by single people, so you can't get double occupancy rents on those. And of course, that affects the whole model, if you like. And that takes us on to pitfall number 3, which is basically the maths of HMO property investing. Now, here's my rule of thumb. I love rules of thumb because it makes things nice and simple. If you've got a property that's divided into 4 rooms, this is how the profitability or the figures roughly works. The rent on 2 rooms will cover your mortgage payment. The rent on the 3rd room will cover your costs, your utility costs, because remember, with HMOs, you're usually doing bills inclusive. So you need 1 room's rent to cover the monthly council tax, the electricity, gas, all of that sort of stuff. And then 1 room is your profit. That then poses another interesting problem. If you're renting out rooms and you're only renting, you've got 1 room empty and you've only got 3 rooms full, then you're simply breaking even. If you're renting out 2 rooms instead of the full 4, you're making a loss. And this is the problem people are having, particularly in areas where property prices are cheaper. Lots of people have rushed to those towns to build brand new HMOs. They're not able to fill them to full capacity, and that means they are breaking even or even making a loss. I run the Baker Street Property Meet. 200 plus property investors meet every month on the last Wednesday of every month, and we all network and chat and help each other, if you like, take our property businesses forward. And I meet people from all over the country at that event, and every month people come to me and say, you know what, Ranjan, I'm converting my HMO back into a single family let, because if the property is not full, then the fixed cost overheads of paying all the bills just does not make it worthwhile. So pitfall number 3 is understanding the maths. Understanding the maths of doing a 4-room HMO, understanding that really, unless you've got 6 or more rooms, the extra burden of having a license probably isn't worth it. And again, that's something that you'll see on few other videos. And number 4, pitfall number 4, which people don't think about often, is the management of these HMOs. If it's near to you, you can manage it yourself, of course. Or if you don't want to manage it yourself, then that will incur a certain estimate of cost. Now, going back to my sort of rule of thumb, if you like, approximately the rent for half a room will be your management cost, which you've got to factor in. And the other thing about management is that when you take on a manager to manage those properties, it is rare that you will get the same voids and the same expenses, maintenance expenses, as you would get if you were managing it yourself. When people self-manage, they often have less voids because they are focused purely on renting out their own portfolio. A manager is looking at your property as well as plenty of others that they're managing. And it is quite hard for them to maintain the same void rate that you can do if you self-manage. And that further has a detrimental effect on your cost base and profitability. So that's something to have a think about. The 5th thing, the 5th pitfall, and this is serious, and this is going to get more and more serious in the coming years, which is council tax. Up till now, council tax is payable by the landlord on an HMO, and you pay it for the whole property as a whole. Now, there are several councils that have started something new, which is very, very strange in my eyes, and I don't understand how they're getting away with it, but they are. And that is, they're imposing Band A council tax on each individual room. And what they're saying is, if you have got an ensuite bathroom in that bedroom, or a kitchenette, then they are going to Band A that room. Now, if you've got 4 rooms, that's 4 council taxes. If a couple of rooms happen to be empty, then who is paying the council tax when those rooms are vacant? That's you. And of course, the managing of that and the notifying the council of occupiers and all the rest of it is just an extra headache. I have known people, I know they've done this in Reading, and we have some people come to the Baker Street property meet from the Reading area, and I know of 2 or 3 investors who are in the process of converting HMOs back into single family properties, simply because it is not worthwhile once the council starts to impose Band A council taxes on each individual room. So, 5 pitfalls, if you like, of how the HMO landscape has changed. I'm not saying that HMOs don't work. I'm saying don't just follow the hype without checking out the reality for yourself. And the way to check out that reality is to evaluate the situation on the ground in the town where you're looking to invest in an HMO against the 5 pitfall criteria that I've given you in this video. My criteria particularly relate to the smaller HMOs, the situations where people are converting normal family houses into 4 or 5 rooms without the requirement for planning. Larger HMOs tend to work in most areas. By larger HMOs, I mean where you've got 8 or 9 rooms or more. Within those sort of situations, you have the economies of scale to deal with all the regulatory compliance issues so that you actually make some profit. It's a pretty similar situation with hotels. A small hotel doesn't work a larger hotel does, because you've got more rooms to cover the fixed costs of setting the whole thing up in the first place. But the downside, of course, is if you want to have an HMO with more than 6 rooms, then you need to apply for a full planning application. And that's where the big hurdle is, because it's quite hard to get a planning permission for a larger HMO in most areas. Let me know what you think. Comment below if you agree, if you disagree. As I mentioned before, I do HMOs myself. I'm not adding to my portfolio. I'm sticking with the HMOs that we've got. One of the reasons I'm sticking with those, I'm not adding to them, but I'm sticking with them, is because they are in high value areas in London and the South East, and as such, they're in areas where it doesn't really make sense, or it's very, very difficult for new entrants to come on the scene. And that's why supply of rooms is limited, and which allows us to keep voids down and costs down and our properties fully let. But other people, who are not in high value areas, are struggling if there's plenty of room competition, particularly with these 5 things, and particularly with licensing on the doorstep. What am I focusing on instead? Well, I'm focusing on commercial property. Not a week goes by, it seems, without new legislation which has been heaped upon the private rental sector and private landlords, particularly in the HMO marketplace. What I find with commercial property and commercial property development as well is that the government is encouraging us. They're encouraging us to develop commercial properties without the needs for planning permission, and I'll put some links to some videos that I've got on this subject. And if you do commercial property buy-to-let, you don't have to worry about the Section 24 tax grab, and again I've got some videos on this. I'll put in the some links in the corner there. And if you do commercial property buy-to-let, because commercial tenants are business tenants, they're free from a lot of the regulation that is now affecting the sort of residential tenancy markets. So those are my views. That's some of the things that I'm doing instead. You can find out more about the commercial property aspects in some of the links that I've given. I mentioned the Baker Street Property Meet. It's the largest networking event in the UK for property investors. Do come along. We meet on the last Wednesday of every month. Details of the next meet are at bakerstreetpropertymeet.com. I'm really interested in your views, whether you agree or disagree. Leave them in the comments below. See you guys in the next video, and happy investing. If you enjoyed this video, hit the like button. If you're not a subscriber, what are you waiting for? Subscribe, hit the bell icon. As soon as we upload, we'll let you know. And enjoy these. They're all dedicated to helping you be more successful in property. Happy investing.